Hey guys, welcome back to the channel. It's me, Adam. You're watching Steady Invest. In this video, I'm going to be talking about Dropbox stock, ticker symbol DBX, and it trades on the NASDAQ. And with this stock, I see people on either side of the fence. Either they're really bullish on where the stock price is going over the next few years, or they don't really think it's going anywhere as it's now trading still below its initial IPO price from a couple years ago. So Dropbox is primarily a cloud storage company, but they also have a very open ecosystem, as they're trying to integrate as many services that their clients use as possible so that their clients don't have to leave the interface. And the company has stable profit growth, and they are trading at a cheaper valuation than most growth stocks out there on the market right now. And there's some pretty big competition out there from some pretty big players. Think Microsoft OneDrive or Google Drive. That being said though, the total addressable market for cloud storage is absolutely huge. The growth rate is absolutely huge. Everyone's staying at home, less people are going to the office, there's more need for cloud storage. And there's more than enough room for Dropbox to get a piece of the pie, as they have been for the last decade. So we're going to go into depth as to why I'm ultimately bullish on the stock and what my price targets are. Before I do, if you haven't already, smash that like button. It helps my videos get out there. As well, if you're new to the channel, welcome aboard. Hit that subscribe button. And if you're in Canada and want to start trading with Wealthsimple or Questrade, use my links below and we'll both get free money. Now, let's get started. All right, first things first, looking at the chart, we are below the initial IPO price back in 2018. It started off around $30. It peaked at $40, and ever since then, it's been downhill. Now, that doesn't mean it's a dead stock or it's not going anywhere long-term, in my opinion. It's just that sometimes IPO prices can be wonky because investors are trying to figure out exactly how much a company is valued at. And since 2018, a lot's happened in the world, especially in the last year. They don't pay a dividend, they are a growth stock, and their market cap is valued at currently $9 billion. Looking at the last year specifically, we saw about a 30% decline. We saw a low at about $15, and then we saw a steady climb up into the mid-20s. That was back in the summer. Since then, it's been downtrending. And then in late November, out of nowhere, we saw a 33% gain. And now we're back at those summer levels again. And what draws me to Dropbox is its cheap valuation. Its current PE is currently at 23. And when you compare that to other growth stocks in the market right now, there aren't very many good deals out there for growth stocks. Looking at their balance sheet at the end of 2019, they had just under $3 billion in assets and just under $2 billion in liabilities. And total debt at about $1 billion. And just over $500 million in cash. So we see the global collaboration platform at scale, 600 million registered users, 550 billion pieces of content, 15.25 million paying users, and 80% of subscribers use Dropbox for work. And actually as well, I haven't mentioned this yet, I actually use Dropbox myself, this little thing over here in the corner. And I've been using it for the better part of the past decade, since I was in high school. And I still use it today frequently, several times a week. They have 60 billion plus API calls a month. So what an API call is so API is Application Programming Interface. And the 60 billion plus means the amount of times Dropbox has talk to one of these other applications. Let's say I'm on Dropbox and I want to use Zoom. So when Dropbox communicates with Zoom and vice versa, that's an API call. So Dropbox is communicated with their ecosystem 60 billion times per month. 85% of active paid Dropbox teams have linked a third-party app. We see that people are using these features, and they have 1 million plus registered developers. And looking at their growth drivers, the one that really speaks out to me is this one: expand ecosystem, grow thriving ecosystem to put Dropbox at the center of users' lives. That's pretty ambitious. But Dropbox is trying to become that central interface that connects everything together. And the more successful they become, the more sticky it becomes, and the more you need to use it, and the less likely you're going to deviate and use something else later on in the future. So the new Dropbox brings together cloud content and traditional files in one place, brings tools together by integrating with best-of-breed apps, and brings people together by transforming folders into rich workspaces. And we see here they have Dropbox Transfer, Dropbox Passwords, Dropbox Vault, Computer Backup, Dropbox Family, and they also have HelloSign, which is their version of DocuSign. And people that are bearish on Dropbox will say, oh, DocuSign is so much better than HelloSign, who's going to use it? People that are using Dropbox. But again, with what Dropbox is trying to create an all-in-one, the more adoption there is to Dropbox, the more and more people will be using HelloSign. And this would come from organic growth. And when you see deep integration partners, these are the kind of names you want to see. And remember, Google and Microsoft are their biggest competitors, yet they're their biggest partners. And you see other popular names: Zoom, Salesforce, Slack, Adobe. And despite Microsoft and Google being their biggest competitors, look at their revenue grow year over year. we see 14% year-over-year growth in Q3 2020 versus Q3 2019. We see average recurring revenue grow 12% year-over-year from Q3 2020 to Q3 2019, as well as average revenue per user growing 3.9% year-over-year from Q3 2020 to Q3 2019. And remember how I'm saying Dropbox is ambitious? They really are. The number that really stands out to me is this last one here, annual free cash flow of $1 billion plus long term. If they want to create an annual cash flow of $1 billion per year, if they're able to do it, and they're currently trading at a $9 billion valuation, if they really are able to execute, we should see some massive price appreciation over the years. And an article I found online that was interesting, so Dropbox and Box both face fierce competition from Microsoft's OneDrive and Alphabet's Google Drive, which provide 5 gigabytes and 15 gigabytes of free cloud storage, respectively. Both tech giants can afford to undercut Dropbox and its peers to tether more users to their sprawling ecosystems. Dropbox controls 21% of the cloud storage market, according to Datanyze, putting it in second place behind Google Drive, which is 34% of the market, and ahead of OneDrive, which is 12% of the market. Box ranks fifth with a 5% share. Dropbox is a top cloud storage provider, but investors still seem concerned about the looming competition. But if we look at Dropbox's fundamentals, we'll notice that it isn't being crushed in a crowded market. When we see year over year, the growth has decelerated, but we still are growing in double digits. We see paying users, average revenue per paying users, gross margin, and operating margins all growing steadily as well. Moreover, they have a stable profit growth and rosy guidance and cheap valuation, as we mentioned before. So for me personally, Dropbox is one of my bigger positions, and I was able to average down back in the fall. And although I am happy with my average right now, which is about $19.50, I still do want more exposure to Dropbox and wouldn't mind averaging up even at these prices. So from a technical standpoint, it looks like we're making a base around this $22 mark. But if we see some weakness in the market, we could break right through that marker. The closer this gets to $18, the more and more of a buy it is. With all that being said, if I didn't currently own a position right now, I would definitely buy at these prices, no questions asked. I'd have no problem with it. I still think you're getting a really good deal, but I want an even better deal, of course. And I'm willing to bet and invest that Dropbox will continue growing alongside these big players. Not to mention the fundamental catalysts and variables that'll help Dropbox continue growing. And as with any investment, make sure you do your full research and due diligence before putting your hard-earned money into that company. Otherwise, that's the end of my video. Thank you very much for watching. If you haven't already, please smash that like button. Otherwise, I'll see you guys in the next one.